Hey everyone, welcome back. I'm going to show you today how I caught 450 pips on gold on two positions. I'll break down the whole liquidity cycle for you. I'll show you how I basically used reactions to anticipate where the move could be going. And I'll basically show you how I assumed where price is coming up to, again, using just my reactional theory. Now, I sent these out to our analysis group. So I sent this one out. I was asleep for that one. I didn't catch that buy. I caught this one. This buy I ended up missing. Well, I sat it out because it's during news, or not that buy. It's a little bit higher. So somewhere in here we got a news release, and I chose to set it out. But there were some really good buys, ultimately setting us up for a sell. Obviously the signals group got all these too, but I'm gonna kind of show you where the idea came from. So if we just look at gold, once again, we hit an all-time high, and you can kind of see how the sell-off started. Usually when a sell-off happens like this, we get a further push down. Now what I like to do is measure the initial reaction that started the move. So for those of you guys that seen some of the recaps, we caught these shorts and we held down into here. So there's a couple ways to do this. So the first is we measure this reaction. So that's the initial reaction. The second reaction I'm going to measure is the mitigation, which would be here. And I would say you would almost go to here. And then we have a third reaction, which isn't as important, but I'll show you how this all ties in. Let me just make sure I pulled this right. So from here to here, actually. All right. So this here, hypothetically, is telling us where the next expansion is going to go. I could have probably held this down to here. My initial TP for this, if I'm being totally honest, was actually down here. I was kind of not too happy about closing out here, but the reason I got that TP is initial reaction. We get a pullback. The deeper the pullback, the further the expansion. So here's our first initiation after the reaction. So that comes to the 027. That tells me there's a good chance the next reaction is going to come from 127, then the 227, and the 327 if price keeps going. So that's kind of the theory behind measuring the reactions. Now this works a couple of ways. Obviously there's different uses for the fib. So for me, the next thing I care about is rebalancing this whole big range. The reason I'm looking at a rebalance is because our initial range rebalanced. So when gold's truly trending, it does not rebalance. It doesn't come back to the 50. So it hits the 236 or the 382, maybe sometimes a little higher, but it rarely touches the 50. This reaction came from the 618. So with this theory alone, it told me that there's a good chance that gold could come to 50% or higher for liquidity. So for me, the first liquidity point is here. And by the way, I did send the buy out to my guys in the analysis group, even though I didn't take it. But the ideas were valid. This one quite upset me. I was asleep for this. So this one went about 230 pips. I managed to catch 85 pips here, which is more of a scalp on gold, I guess. But that's all right. So now, with the theory that I had in mind, we're looking to come above the 50. You can already see the liquidity cycles initiated. We have build up. Now we just need to induce. So we're waiting for that last push to induce into liquidity or imbalance. With that in mind, we want to measure the reaction that started the move. So if I look, reaction, this is the pullback. This is my first reaction. What do we have here? 0.27. So that's telling me that there's a good chance the next reaction's coming from the 127. And the reason the fib works like this is if you ever go look up how they use a Fibonacci on a hurricane, they measure the eye of the storm at the beginning, and based on how much it basically expands on its first expansion, they can predict where it'll be in day 2, day 3, and day 4, and that's how essentially they predict a category 5 hurricane before it happens, just by the size of the initial reaction, you would say. So anyway, with my expectation being at the 127 and my expectation coming to rebalance the range and grab internal liquidity in the direction of trend, it was obvious that this is all buys until we find a high either here or here. So this is my preferred choice, and then this would be kind of the next choice, which I would just pick this liquidity. It's close enough. So that's kind of how I use reactions to measure. So with that in mind, we can just go up. Yeah, I was initially going to put a buy limit here, but I just chose to sit it out because sometimes these news come through gold quite aggressively and they more or less can hurt. But this one would have been a nice 3R and whatever amount of pips it was, but I would have likely did something along the lines of here, put an order under this lit, and that would have been the buy. But again, I choose to sit these out. There's really nothing to this. I got an aggressive reaction. There's my liquidity cycle. I can pretty much just execute this. I don't need to wait for anything. There's lots of travel room on this. So that's the first position. Wait. We went here, sorry. There's lots of travel room on this. So for me, TP1 is here. And then TP2 is here. Because I have two positions, I really don't need to push for TP2, but it does end up going there. So that's the first position. I don't really cover much above because if price comes and manipulates, I'll just take the loss and get back in. Like there might have been a few pips covered above. I don't know. I'm not really too concerned about that. But with that reaction right off the bat, I feel pretty safe taking that. And ultimately, I just put another sell stop here. So if price comes through this, there's really no reason for price to visit up here. There's no imbalance. Orders are filled. And same thing. Now, if I remember right, we closed one out at Asia lows just to take something off the table. And yeah, so that's about how this trade went. Back to our liquidity cycle. Here's your last inducement. We took out the induced buyers at the last area, and now all these people are toast. Essentially, that's how the liquidity cycle works. So this one runs the TP pretty quick. There's really not much to this one. So this one added up to about 450 pips combined. So it's a pretty decent sized trade. I probably could have held to here, but when I have two positions, I really don't see the reason. Okay, so to show you guys what else we have going on too, we're back to our reactional theory here. Let's go to the 1 hour. So we can kind of tell how gold is going to expand based on the initial reaction here. So that's kind of our initial reaction. And then if we look at where the expansion comes from, you could say the first true reaction kind of comes at the 161. You could even say it kind of comes to the 2. I would count this as my first reaction. That's a decent sized pullback. So for me now, the areas of interest are here and here if the expansion continues. So that's kind of how we can anticipate where to look for liquidity. So we didn't really get a pullback here to measure this reaction too accurately. This one here pretty much ran its course. Once we hit the 3.618, I don't really keep pulling that fib anymore. I'll just find the cycle to start over again. But let's just see how this looks. And you can kind of see what happened here. Gold came and reacted. By the way, for those of you that are paying attention, this is when Trump spoke and said he's going to lower taxes, and the US dollar got bought, gold got sold off. This is CPI, price reacts, reverses price. And the reason for that is these are heavy liquidity injection zones. So generally, if you see momentum that was caused by something, expect a better reaction there. So with that in mind, I can pretty much assume that gold will likely continue down. So for me right now, if this high gets taken, I would be looking for buys. This would be TP1, this would be TP2, and that'll obviously, so we have core PCE tomorrow. It's our last inflation reading before the, no. Okay, so it doesn't show it, but there's core PCE, tomorrow, my bad. So core PCE tomorrow, so that one has the ability to move gold. It's the last inflation reading. So for me, depending what that does, this would be TP1, this would be TP2, and ultimately I would be looking to expand down to here after. So that's kind of how the reactions in the liquidity cycle are paired together. Hopefully you guys enjoyed this video and got some takeaways from it. It is a little bit tricky to read it this way, but it's definitely worth learning. But yeah, if you guys haven't subscribed, definitely do, and I will see you in the next video.